Hey everyone, and welcome to this explainer. Today we're going to completely demystify the eToro platform. We'll be walking through a full playbook together, literally starting from your very first click, all the way down into the fine print of its hidden costs. My goal? To make absolutely sure you understand exactly how this whole machinery works before you put your hard-earned capital on the line.
Okay, let's dive into this. On our agenda today, 1. Starting your investing journey. 2. Power of fractional shares. 3. ETFs and leverage explained. 4. Copy trading and smart portfolios. And finally, 5. Breaking down the fees.
All right, Section 1, starting your investing journey. So eToro gives you this virtual demo account loaded with $100,000 in virtual funds. Honestly, it's a fantastic risk-free sandbox for learning the mechanical stuff. Clicking buttons, looking up tickers, executing trades. But there is a massive psychological shift when you transition to a real account. When real money is on the line, your emotional involvement just skyrockets. A strategy that felt like a total breeze in a simulation, yeah, it feels entirely different when it's your actual savings swinging up and down.
To put that into perspective, listen to this quote from Jane, an eToro community member. She says, "The demo account was a great learning tool, but nothing prepares you for the adrenaline of real trading." I love that, right? Because it perfectly captures the human factor here. You can master the tech perfectly, but managing your own psychology, whole different ballgame. Moving on to Section 2, Power of Fractional Shares. Now, you might be wondering, what if a single share of a company you absolutely love costs $1,000? Historically, that was a huge barrier to entry for everyday retail investors. If you only had $100 to invest, you were kind of just locked out of owning parts of major tech giants like Amazon or Apple. So the crucial point is $10. That is literally the minimum amount you need to unlock fractional ownership on the platform. You don't need thousands of dollars to get in the game anymore.
It's exactly like buying a slice of cake rather than the whole thing. Behind the scenes, the broker buys whole shares of these massive companies and then basically divides them up among clients who just want smaller pieces. So if you want to put $50 into a $1,000 stock, you just buy a slice. It's a real game changer that perfectly democratizes access to the market.
And because you can buy these tiny slices, fractional shares brilliantly enable dollar cost averaging. That just means investing a fixed amount of money at regular intervals, say $50 every single month, regardless of whether the market is up or down. Since you can buy fractions, you can consistently stick to this strategy to help smooth out market volatility over the long haul.
Okay, Section 3, ETFs and leverage explained.
Let's look at exchange-traded funds, or ETFs. It is surprisingly simple to grab an ETF to diversify your portfolio. Step 1, you fund your account. The minimum after your first deposit is usually just $50. Step 2, simply search for an ETF ticker or even a broad theme like ESG or bonds. Step 3, enter your amount, remember, as low as $10, and hit buy. That's the whole shebang. Very streamlined.
Now let's pivot to something a bit more advanced and, frankly, much riskier: leverage. Leverage simply means using borrowed capital from the broker to increase your position size. It is absolutely a double-edged sword available for contract for difference, or CFD trades. And this brilliantly illustrates the math behind that double-edged sword. Say you use X1 leverage, meaning no borrowed money at all. A $1,000 investment moves $10 for every 1% change in the asset's price. But if you use X2 leverage, you're borrowing funds to double your exposure to $2,000. Now, a 1% move means a $20 profit. But actually, scratch that, it also means a $20 loss if the market turns against you. It amplifies your wins and your losses equally.
Right, Section 4, Copy Trading and Smart Portfolios. Breaking down these minimums tells a fascinating story of accessibility versus premium features. You can start copying an individual trader with just $200. If you want a thematic smart portfolio, that takes $500. But look at the top trader smart portfolio, that requires a $5,000 minimum. Why? Well, this feature lets you strategically leverage the time of seasoned pros who analyze markets all day. That 5K is required because you basically have multiple top investors working for you all at once. And the platform needs enough of your capital to proportionally open all those underlying fractional positions on your behalf. Now, what's really interesting about this slide is we're moving into Section 5, breaking down the fees. Time for a reality check. This table neutrally lays out the primary trading costs you're going to run into. ETFs, totally free of commission, which is awesome for long-term passive investors. But buying individual stocks will now run you a $1 to $2 commission per trade. Forex spreads sit around 1.0 pip for major pairs. But look closely at crypto. There's a 1% spread on the buy side and up to a 1% spread on the sell side. So you're looking at a potentially steep 2% round-trip cost just to get in and out of a crypto trade. Here is a surprising fact that active traders absolutely have to calculate into their margins. If you hold those leveraged CFD positions we talked about earlier overnight, you get charged a fee every day at 2200 UK time. But holding it over the weekend, that fee is charged at triple the standard rate. Triple, no way around it.
Plus, getting your money off the platform isn't always free. Withdrawing from a USD account comes with a flat $5 fee. Though, to be fair, it is free if you're using GBP or EUR accounts. Finally, we really have to talk about non-trading costs. You've got currency conversion fees, a 2% fee to transfer crypto to an external wallet, and a 0.5% UK stamp duty on UK stocks. Oh, and let me just playfully remind you, if you don't log in for 12 months, they hit you with a $10 monthly inactivity fee. Literally, just logging in once a year saves you that charge. So this brings us to a final provocative question for you to ponder. Does your long-term trading strategy actually align with these mechanical realities and hidden fees? We've explored the amazing accessibility of $10 fractional shares and the whole world of social copy trading. But you have to weigh those features against the flat stock commissions, the crypto spreads, and the withdrawal fees we just went through. Understanding both sides of this playbook is absolutely crucial for your investing journey. Thanks so much for joining me for this explainer, and keep learning.